Hello traders, welcome to another daily analysis for March 7, Tuesday. We're gonna do a quick recap. Right now it's March 8th, Wednesday. We are just about 2 hours into the London session. Now the market is very quiet in these few days, and there's no surprise. As I mentioned, we don't really have much data for this week. Only until Thursday, where we first of all have an ECB conference. Then Friday we will have the non-farm payroll. Now next week will be a quite volatile week because next week is where the Fed decision comes out. So prior to that, I think a lot of traders stay on the sideline and basically want to see a more clear direction, especially for Thursday ECB and Friday's non-farm payroll. So that's why Monday, Tuesday, and probably today also will be a quiet sessions. Today, really the recap, lack of data. The only few data we have, we don't have anything. We didn't have anything London session, and the only thing we had is a New York session. We had trade balance from Canada, which came out better than previous and expected. U.S. trade balance was lower than expected and previous number. However, these two data are not really didn't drive the market too much, especially at this moment. We also had the GDP price from New Zealand, which came out as negative. Now, New Zealand has been largely sold off, and there's few reasons. Not only because the GDP price, mainly is because the risk of sentiment, and that a lot of people think New Zealand dollar had been overbought from previously. So we still have a lot of seller coming to New Zealand dollars selling it. The IVPMI data from Canada was also a negative number. And later you also had the GDP data quarter to quarter, year to year from Japan, which both came out as a miss, but in line with previous. So we'll talk more about that, about the Japanese economy. But the biggest catalyst for now is perhaps the Chinese trade balance, which, the expected number was 173 billion, and the previous number was 355. So the world expected a lower number, but it actually came out as negative 60 billion. So that was a huge miss. And of course, because of that, we saw a lot of risk of sentiment coming into the market. Now, however, market didn't collapse per se, or it didn't really, especially for Australian dollar, it didn't really get sold off. That's because if you're looking at the detail, the negative trade balance was coming from the higher import, and that higher import particularly is from iron ore. So although the trade balance was negative, but that's because they actually buy more iron ore, which is very helpful for Australia. And that's why we didn't really see a collapsing Aussie dollar because of that. So not really a negative thing for Aussie, but it does create a general risk of sentiment for this London session right now. So again, very lack of catalyst. Everything is trading in a very tight range. Now for each currency, Euro, the political situation continues to be the main catalyst. The next catalyst will be the ECB conference on Thursday, which we will really looking to see whether the central bank, European Central Bank, will change their dovish stance, because back then they say that the inflation is still low, and even if it's getting higher, it's because of the energy price. So right now, since the headline inflation has hit 2% already, which is ECB's target, so we'll see how are they going to address this data. They might just really completely ignore it, which they did last time, and they can just say that the core inflation is still way below target, which is true. So they could very much do that, and that will means continuation of dovish and bearish stance in euro. Or they might at least become a more optimistic or more upbeat. It really depends on their tonality. But one thing most likely is now they are not going to change the interest rate or anything at all, especially ahead of the French election and Dutch election. For US dollar, it's very quiet right now. People are really just waiting for a Federal Reserve for next week, and the next catalyst will be the non-farm payroll. And really, it's not going to cause too much movement. If we have a positive non-farm payroll, it just shows give a market more confidence that right now the Federal Reserve is most likely going to hike for March, which is next week. If we do have a very negative non-farm payroll, then things will be a little bit up in the air. But most likely, I think people are kind of clueless right now, and really, I guess that's what happened in the market right now. It's a lot of people want to buy. Also, you have equal amount of people wants to sell. So another new catalyst will give a more light. For British pound, continue to be the biggest loser for this month. As I mentioned, I think March will be a very volatile month for British pound due to the triggering of Article 50. So, you expect to see a continuation of weakness into British pound. Now, right now, the Brexit bill is currently in the parliament, and we still have this battle between the government and the parliament. Now, all these things just gonna cause more and more uncertainty into the pound. Now, of course, occasionally you will see a large rebound in British pound, but in a general direction, it is still looking to the downside. Now, for Canadian dollar, because of the dovish Bank of Canada, really the general direction also looking to the downside. You do have a good support from OPEC, oil market, and some nice fundamental data. But because the concern for Bank of Canada is so large in regarding to the NAFTA deal, as long as Bank of Canada still keep this dovish stance, we should still see a little bit downside pressure into the Canadian dollar. For Australian dollar, continue to be very well supported, both from the Reserve Bank of Australia, from a positive commodity price. And as today, like I say, you saw a negative Chinese trade balance, but that was due to a large import, especially the iron ore. So that's already quite helpful for Australian dollar. Now, a lot of people are looking to sell Aussie, and that certainly is logic. It's because it's really at a very, very high level. So, if you're looking at a lot of Aussie pair, especially like Aussie Newsy, it just one-way street up and hasn't pulled back yet. So of course it's naturally to have some pullback. But this is a thing when you talk to other trader, and the person might say, I'm going to buy Aussie. The other person might say, I'm going to sell Aussie. And the fact is that labels can be right. It's because labels have different time frame. So a person who wants to sell Aussie certainly is very logic because he wants to get some pullback, wants to get some this short-term, retracement to make some money. A person who wants to buy Aussie, maybe you're looking to buy at the next support. So although on the hindsight, they might seem contradict to each other, but I understand the market is always an up down movement. So there's always money can be made in both sides, and that's why you gotta look at the detail and listen to the detail of each trader. And that's why I never really judge or criticize any other traders, because I think everyone is very unique in their own style, and everyone definitely have your own time frame, have your own management style. So I wouldn't really say a person who's selling dollar right now is wrong. No, absolutely, US dollar can, basically the conclusion is that there is money to be made in both sides all the time. Okay, so that's the interesting part about trading. Now for New Zealand dollar is another biggest loser, other than British pound. And as I mentioned, aside from the negative GDP data, negative Chinese trade balance, basically it's really from the dovish central bank, Reserve Bank of New Zealand, a general risk of sentiment and the fact that New Zealand dollar had been largely bought previously. Now, of course, personally, I had a lot of New Zealand dollar loss before, and that's really puzzled me. But I guess at the end of the day, market still choose to follow, predominantly follow the central banks, because data-wise, I still think New Zealand dollar is doing quite well, and the yield is still very high. But regardless, it's better to follow the market direction than to fight it. For Japanese yen and Swiss franc, both are still the same, with lack of catalyst. Both are fundamentally bearish, but sentimentally neutral, especially right now in this kind of uncertainty. We will always have a safe have an inflow into these two currencies. So right now the central bank position, nothing has changed yet. Everything's still the same. With current bank rate is still also the same, and 10-year bond yield is still the same. So again, I'm right now really only looking to buy US dollar and Australian dollar. Everything else I'm looking to sell against these two currency. Let's take a look at my current trade. Now, with lack of catalyst, I don't really have any intraday trade at all. So basically, I'm still holding for my day trade, my swing trade. My Aussie Swiss still in, really just within this range. Aussie Yen, I still have my pending order at 86, still waiting to get filled. Euro dollar also, really we just within this range. Now Euro New Zealand is terrible. I gotta be honest with you. I was really don't want to hold this trade anymore. But if you look at this consecutive of green candle, I just think it should give us some pullback, and that's why I don't want to get out at this resistant area, because it is at a resistant area. If you just draw a line, you are right at this kind of 52 is a meaningful resistant area. So I just think we should at least give us some pullback, then I can get up. But ever since this green candle at low at 46.85 to 52, that's almost 600 pips, and really without any retracement. So that's why I was really still waiting for that. Now I might be wrong, and that's just the risk I have to take. If I'm wrong, then I'm gonna lose the whole thing. But if I'm right, I might be able to get out at break even. But nevertheless, it's just not a good trade to get into in the first place. This was my own wrong analysis, and that's why I'm basically stuck in this trade. Other than that, cable is working well. We're still holding it. It does look like it's gonna drop more and more. Today we do have few British UK data coming out. I think we will have the annual budget release. Now this might not be that significant, as I mentioned. Right now, the real catalyst for British pound comes from this Brexit bill. So unless we have any new updates, otherwise this might not be that significant. Should continue to see a sort of downward movement in British pound. Dollar Swiss, another trade I'm still in, still holding it. Really nothing going on here. Same as dollar yen, still holding it, still waiting. The thing I don't like is that we still wasn't able to touch 115. It's just not a good sign for me. It just kind of suck. It's like you everything's January, at the end of January, you're never really able to touch 115. Even this one, it's like 5 pips away from 115. So, I'm really hoping that we can at least touch 115 again, and that will give us more confidence. Otherwise, this thing can easily drop again, and I wouldn't be surprised. So, I'm at break even already, so really not to worry about it. But of course, we're hoping to, hoping to touch 115 again. So pretty much that's the thing I'm looking at right now. Don't really have any new trade, but let's get into the 20-year period regardless, just to see what we have here. So Euro pound, same thing, continue to go up for euro versus pound. It's because British pound is really weak. Euro Swiss, again, not something I'm looking to do anything about. Of course, this is a beautiful kangaroo tail, but do I really have any justification? Fundamentally, no, I don't. So I don't really like to do this kind of trade. Now, that doesn't mean it's not good. Doesn't mean, if you're a technical trader, you by all means, you feel like this is a nice level, you want to sell it, that's perfectly fine. As I keep mentioning in many of my videos, it's not about how you approach the market. It's really about, can you consistently approach the market with the same style? That's what's going to make you a winning trader or losing trader. And the reason is because doesn't matter what style you use, you will always have a losing streak and winning streak. That's just something you have to get into your mind. There's no strategy is perfect. You will always have a winning and losing streak. The last thing you want is to change or quit when you face a losing streak. And that's why you have to trade with something you're certainly comfortable with and you understand it, and you have to be consistent with that approach. Euro dollar, already mentioned about that. Euro Aussie, I'm still very interested in this 1.40 level, but I don't have a meaningful rejection candle here. So for me, I am looking to really maybe after Thursday, after the ECB conference, then I will have more clear direction. But regardless, I do want to sell it. My bias is to the downside, but I don't want to get in when and only to see it shoots up, because it could go to the next level at 1.4250, right? So I'm going to wait for some meaningful rejection before I get into it. EuroCAD, not looking to do anything about it. And Euro Newsy, same thing. This is the one I'm looking to get out. Really not a good trade for here. Euro Yen, again, not looking to do anything about it. Pound Swiss, I'm staying out. Keep dropping lower in all the British pound trade. Pound Aussie also keep dropping lower. Now, I really want to sell Pound Aussie, but the problem is right now, all these levels are just too close to the all-time low. So for me, I am not going to do anything unless we have, for whatever reason, we went to 1.65 or even 1.675. That will be a interesting level, right? Anything below that, I just think the risk reward is not good enough, and really you are setting at low. So we'll see how 1.59 holds up. Another scenario is that it might breaks down 1.59, then this will be a new resistance. But that's gonna take, I think, another month or so, because that will happen if we have a new fresh catalyst that is very negative for British pound. Pound CAD also not something I'm looking to do anything about. Pound USD, same thing. Previously we got out break even, not something we're looking to do. Pound Yen continue to drop. Swiss franc yen, also not looking to do anything about it. Dollar Swiss, already mentioned, we're still in, same as dollar yen. And dollar CAD, we are looking to get into it. Of course, it's at a very high level to buy already, so have to wait some meaningful pullback before we get in. Let's take a look at Australian dollar. Aussie Swiss is the one we are in. Aussie dollar, I'm pretty much stay out of this trade because labels are equally strong. Aussie CAD also looking to buy, so perhaps if we can retouch this 1.01 with a rejection candle, then that would be a good area, but right now it's just too far away for me to do anything about it. Now, Aussie Newsy is the most overbought currency pair. We're just so far away from all the moving average, and it shoots up, and I think it might keep going up. But this is the thing you definitely don't. Well, I shouldn't say you definitely. It's really depending on your own style, but I definitely don't want to chase the high or chase the low. So just have to be fine if you miss a trade for whatever reason, just let it go, right? It's the one trade is not gonna define your trading career. That's something you have to remember. So it's fine to let it go, let it pass. I understand you always have this kind of movement, always have a trade that you are going to miss. So it's fine about it. We have to wait for pullback before we get in. Aussie yen is also the one I'm still has a pending order. Not in yet. Now, CAD Swiss, not something I'm looking to do, but as I mentioned, we are at a significant support area. Now, CAD Yen is exactly the same thing. You are at a significant support area. What would make me go into CAD is if Bank of Canada can change their dovish stance to a more neutral. And that can happen very fast because the NAFTA deal will be renegotiated. So once that's removed, once that risk is eliminated, once the NAFTA deal renegotiated to doesn't matter what the result, but once that renegotiated to a much clear outcome, then Bank of Canada will reassess the risk. Then they might change their position back to the previous one, which is a neutral. Now, once they become neutral, then you can start playing the fundamental data or the oil market itself. Then CAD will be another good currency to buy again. But right now, because the central bank is so dovish, I don't want to go against with them. Same as Newsy, you can keep saying it just keep dropping versus all other pair. Newsy CAD, even Newsy Yen. So we'll see when it stops, and again, we are really approaching meaningful support in a lot of Newsy pairs. So we should at least see some retracement very soon. But don't hold your breath. Sometimes this thing can drop very, very far away. So that's pretty much what I have for now in terms of swing trade. I don't have any intraday trade because there wasn't much risk events for these past few days. Today also don't have risk events. I'm looking to trade ADP non-farm employment change, but only if we have a positive deviation, because right now I'm only looking to buy US dollars. So if we have a positive deviation, then this could be something worthwhile to trade. Crude oil inventory, not looking to trade it, and the CPI Chinese data is going to affect the general market again. Thursday is finally the catalyst day. Can trade the ECB conference, and just looking out to see how the ECB will change their stance. And then finally Friday, you can trade the non-farm payroll. So I think Wednesday today will be another quiet day. ADP, you could trade it. Again, it's pretty much not going to give you too much movement unless you have a deviation, which, let me see. This one comes out at 8:15, March 8th. 8:15, right here. Oh, this one is actually not a tier 1 data on my routers. Very interesting. Regardless, okay, so the expected number is 190. It says 184 here. So previous is 246. So if you have anything over 247K, 247,000, you can buy US dollar. I'm not looking to short, so that's the only thing I'm looking at. So if I have a number over 247, let's look at previous one. Yeah, 247. If we have anything, that will be the highest one. So 247 will be a positive deviation. Now, which pair you can pair up? Really, anything other than Aussie, I think can all be paired up. Depend on the daily range, and depend on where the market is. If you have a risk of sentiment, then maybe you want to avoid yen and Swiss franc. Maybe go with euro dollar, I would say. But we'll see what happens. I don't really think it's gonna be much movement for that one. So that's pretty much it. Quiet day. What you can do is again do some research, things like that. Other than that, I'll be back tomorrow with another daily analysis. And again, let me know if you have any questions. Okay, thanks for watching. Bye bye.